Good afternoon and welcome to our webinar, How Startups Are Shaping the Economy in Latin America. I'm Lina Delgado, Executive Director of the Colombian American Association. We are the first binational chamber of commerce of Colombia established in the United States. We are a private, nonprofit business organization founded in 1927 in New York. The association purpose is to create greater knowledge and understanding of Colombia. We seek to disseminate up-to-date information on economic, financial, political matters, and to promote commercial and cultural ties among the people of the two nations. Today, I am pleased to welcome our panelist, Tarek Sherif, founder and CEO of Zinobe, Juan Gonzalez, business director at Trinity Capital, and Carlos Ramos de la Vega, manager of venture capital at LAVCA. This great panel couldn't be complete without Marcela Shine, head of community at Ureeka. She also is angel investor, startup founder, and entrepreneur. Marcela will be the moderator for today's program, and she will lead the conversation. Thank you all the panelists for accepting this invitation to be part of this great conversation. Also, I want to thank everyone who is virtually attending, and I hope you enjoy this program. Marcela, the floor is yours.
Thank you, Lina. It's great to be here again. I want to welcome our speakers, and I'd love to give them a chance to introduce themselves. Since we're here to talk about startups, let's start with Tarek. Tarek, tell us a little bit about yourself, and then we'll go around our virtual room, if you will.
Thank you, Marcela, and thanks to Lina and the CAA for the invitation. So my name is Tarek Sherif. I am originally, let's say, from London, which is where I grew up, but born in New York, so I'm an American citizen, and my family is of Egyptian heritage. So I'm here in Colombia because my wife is Colombian, and I'm the CEO of a company called Zinobe, which is a fintech based in Bogota, with operations in Colombia and in Mexico. And we develop digital products and services for the underserved. And specifically, we concentrate on credit products. We have two lines for consumer credit and small business credit. And more recently, we started selling some of our platform services to third parties to help them create digital products, manage risk, and automate processes as well. Prior to that, I was working initially in New York in JP Morgan investment banking, and then in Deutsche Bank in London in the sales and trading side.
Thank you, Tarek. It's great to have you here. Juan Camilo?
Yes, good afternoon. Thank you very much for the invitation to the CAA and for you, Marcela, for moderating this panel. My name is Juan Gonzalez. I represent the international branch of Trinity Capital. Trinity Capital is a Colombian family office. We have Colombian capital, but we've decided to also open international branches to look for more opportunities in different sectors. We invest in traditional sectors with more asset-based companies in Colombia, and we've decided to open two international branches to invest in the venture capital startup ecosystem. So it's a pleasure to participate and share some of our experience in the last 12 to 18 months in that space.
Thank you, Juan Camilo. And I saved Carlos for last because after Carlos introduces himself, we're going to actually kick off by also having Carlos just jump in and giving us a bit of an overview of the ecosystem of Latin America. And of course, we're going to dive into Colombia a little bit. Carlos?
For sure. Thank you, Marcela. And thank you for the CAA for the kind invitation. My name is Carlos Ramos de la Vega. I am the manager of venture capital at LAVCA, which is the Latin American Venture Capital Association. We basically cover the entire investment activity in the region, all the way from Mexico, Brazil, Chile, Colombia, you name it, the 33 countries in the region, which of course, Colombia is one of the prominent members. We have more than 170 members as part of the nonprofit, which are basically the top investors in the region. And we have everything from corporate venture capital members to venture capital traditional funds who are super interested in the asset class, who have been developing the regions and who have been able to get the region into a certain maturity level that we had never seen before until this past couple of years. So more than happy to be here with you. And just to kick it off, a couple of comments. I think it'd be really good to be a bit data driven here. And we have a really, really robust research desk that again just tracks all investment, exit, and fundraising activity in the region. And we actually, like for example, for last year, right? The last numbers that we have completed are for actually the first half of 2020. We actually saw an inflow of $1.2 billion into the region, which actually is one of the top first halves in terms of both VC numbers, VC number of transactions, and VC dollars in the region. And keep in mind, we actually have to adjust this because in 2019, it was an extremely prominent fund. SoftBank actually entered the region with a $5 billion Latin American fund, which of course inflated the capital inflows into the different countries for sure. But if we actually adjust these numbers, then the first half of 2020, which is the most recent data that we have, has been a record, first half. Why is this important? Specifically for Colombia. Colombia is right now the third market in the region, just after Mexico and Brazil. That talks again about a level of maturity. 8% of the transactions and 8% of dollars actually went to Colombia. And just in September of last year, like less than 5 months ago, we already saw the first Colombian unicorn. Of course, everyone's familiar with Rappi right now with a valuation of more than $3.5 billion with private equity capital, not only venture capital, which is another topic that we can touch on later on. But I think we are very positive about all the developments and looking forward to diving in, Marcela.
Thank you, Carlos. You talked about the inflows of investment. And Tarek, I would love to kick off with your view on the ecosystem, since you're a startup. And I'd like to hear a little bit more about your fundraising journey so that we can start tying together what you experience with what's happening generally in the region, particularly since you're in both Colombia and in Mexico.
So when we started operating, which was about 8 years ago, I think Colombia was not on the map for a lot of international investors. And then locally, there was not much activity or real sophistication. I think generally the size of the investments for startups was very similar to kind of friends and family rounds that you'd find in the US. And yeah, if we fast forward to now, the scene is very, very different. And yeah, I mean, Rappi is a good company to mention because I think Rappi brought a lot of attention to Colombia as potentially a hidden market where there was value, especially when there was a lot of kind of frothiness in Brazil and then in Mexico with some of the valuations going in, and it was a lot more competitive. And I think the effect that you know that had and subsequent investment rounds you know also opened the eyes to a lot of entrepreneurs here of what was possible. I remember speaking with one of the founders of Rappi, and he mentioned that they were very surprised initially, and they didn't have the confidence until they started you know having some success. And I think that success and confidence translated to a lot of people in the ecosystem. So I still think though that looking for international investment, Colombia is still going to be hamstrung, you know, with the size of the market and the lack of history of success cases and exits and so forth. So you have to kind of pick and choose what your business plan will be, and can it be regional to attract the larger valuations, or if you stay local, is the local size big enough? But I don't think it's probably hard to convince a lot of international investors that if you're exclusively local, you will be that large. And that's kind of mirroring our journey too. So moving from owning and operating financial products to concentrating on what we're good at, which is the technology part of it, technology applied to automation, technology applied to analytics, technology applied to user experience, and trying to monetize that internationally and not be so grounded into Colombia. Colombia is a good starting point, I think, to launch different products across Latin America. So very similar to an Ohio in the States. I think it's fairly neutral in the Spanish and the accent understandable. And I think it's a good hub, I think, to attack a lot of countries nearby. But definitely, it's a very, very different scene. I think you definitely have more visibility, a lot more people inquiring. We get a lot of inbound traffic, both regionally and internationally, that we didn't get for the first few years.
That's great to hear, Tarek. Juan Camilo, let's take a step back and talk about the ecosystem that you're seeing here in Latin America, and then I'd love to break it down into the different countries and how they compare. By ecosystem, I'm talking about if I'm a startup founder and I want to go out and raise money, right? In America, we're looking, you put in some of your own cash, hopefully, if you have it, friends and family, pre-seed, seed, like there's a kind of a sequence that depending on your experience and what you've done, that follows a common trail that when you get to VCs, they know what you're looking at. Can you give us a little bit of perspective on what you've seen here in Latin America and how what the differences are between the different regions?
Absolutely. So I have to, if I want to start talking about this, I have to take on Tarek's point about Rappi. Rappi didn't really open the way for all the other startups to think that it was possible to become a unicorn. And that sort of woke up the ecosystem in all kinds of different fronts. All the actors in the ecosystem woke up, and then a lot of funds became available to these startups, from high-value angel investors, family offices, and also repeat founders. A lot of founders that founded companies before exited their businesses, or even they disappeared and had closures, they felt encouraged to start businesses again. We have to talk about the ecosystem in Latin America with before the pandemic and after the pandemic. As investors, because of course we have to be the bad guys in this conversation. As investors, we have perceived.
Fine, you're only the bad guys, so you're the good guys.
Yeah, it depends what point of view you're looking at it. But for sure, what has changed. So prior to the pandemic, funds were flowing very rapidly and very easily with not much due diligence, to be honest, because there was, first of all, in Latin America, there's so much talent, so many good ideas that it was easy to be convinced to invest. Then the pandemic hits and we get to March 2020, and funds, family offices, and angel investors start to look at their own portfolio and try to protect and defend that portfolio and continue to repeatedly invest in that existing portfolio. My way of saying this is we are already on that train. Let's keep pushing that train instead of jumping on all kinds of different trains. And then post-pandemic, I think investors in general are going to be less patient with potential exits. But knowing that there's so much potential, I think there's going to be more effective investment and more hands-on investors trying to add value to the investee companies. So the dynamic is going to shift a little bit. I think founders are going to be asked more from the funds, and they're going to have more collaboration and more hands involved moving forward.
Hey, Juan Camilo, quick question. Since you just said that it was before the pandemic easy to be convinced to invest, can we spend a little bit of time talking about what sectors or industries were getting those dollars before the pandemic? And Carlos, Tarek, I'd love to hear your experience in what's happened post-pandemic. What sectors are now getting the investment and seeing growth?
Yeah, so, and it's not because Tarek is here, but I think for us at least, we come from the banking background, but fintech, there is so much space in the fintech industry, and there were so many good technologies and ideas with the digital wallets to allow that access to banking services to different people with no credit or very little credit. So we saw a lot of opportunities in that space. Biosciences and health technology, there's always a lot of innovation. And even I see post-pandemic with more influx of opportunities in those spaces. I think specialized technologies in different sectors. We've come across a lot of opportunities for improving processes in different industries, like mining, for example. There's also a lot of new technologies for cleaner technologies, so clean tech, a lot of new technologies for wellness within the companies to create wellness programs for the people. So that's our experience. A lot of these trends are going to continue, I think. But I also would love to hear Carlos's opinion on this, because I want to keep my eyes open for the right opportunities moving forward.
For sure, Juan Camilo. And let me just complement exactly what you're seeing, I think, echoes with our analysis and our research from a LAVCA perspective. But let me just dig a bit deeper. In terms of fintech, well, fintech has been the leading category in terms of verticals across the region for more than 5 years. There's a reason for that. There's a huge gap in terms of the underbanked, in terms of people that and small and medium enterprises that need these types of services from the lending perspective, from the collateral perspective, asset management. And there's a huge opportunity because incumbents are just not moving fast enough. So, but one of the things that we saw, especially after the pandemic, for example, is that fintech can be conceived as a pure play opportunity, but it can also be conceived as a category permeating other verticals and enabling other verticals. Just to give you an example, there's been a rise in, for example, fintech technologies that are related to payments in e-commerce businesses. So fintech becomes an enabler, for example, for the e-commerce category after everything and everyone had to be moved into isolation, for people to continue their lives and to actually be able to have a better and smoother processes. So that's fintech, for example. In Colombia, there's still a significant fragmentation in the real estate industry, for example. So we're seeing a rise in prop tech. The most recent round was for La House, which was a 35 million Series B round, which was actually led by Greenspring Associates from the US, but with collaboration from NFX in Silicon Valley and from local investors like Gesec Ventures, which is from the former founders of Mercado Libre. So smart money is actually looking at the opportunity and they're knowing what they're seeing for sure. But at the same time, even more related to the pandemic, we see things like, for example, what's going to happen with the ed tech and health tech sectors, right? Education and healthcare technology. Yes, there are some signals that these sectors are accelerating, and they have been accelerating by the pandemic. But point blank, for example, Parmalisto, another company in Colombia, they just raised another $18 million from IDB Invest, and curiously enough, it was all interest in their cap table from international investors. So you had IDB Invest, of course, a multilateral institution, but you also had a Swiss healthcare fund, and then you had a New York-based hedge fund. And they all put together $18 million to create not only an online grocery, an online pharmacy, sorry, but at the same time, a new service in telemedicine. So I think one of the main questions here is if regulatory frameworks are going to be able to keep up to private sector and private capital investment and the way that it's moving into these new categories and these new industries. We've seen telemedicine already well positioned in Brazil. It's also gaining some traction in Mexico, and Colombia is the third market in which we're seeing this. So there's definitely opportunity to innovate. And I think after the pandemic, the entrepreneurs were most well capitalized, but at the same time they have the ability to pivot are the ones who are going to be more resilient, and investors are going to be looking at that for sure.
Thanks, Carlos. Tarek, I'd love to hear your perspective on how all of this is affecting your client base, your audience, as you're serving these underrepresented. How are you seeing this trickle around? Is there a sense of growth with the pandemic based on what you're seeing? Can you talk to us a little bit about that?
I think the one element that's changed the most dramatically is just perception in the market and our opportunities to partner with different institutions. I think the pandemic highlighted some of the deficiencies that the incumbents had. So whether it's digital onboarding, whether it's kind of more dynamic, precise decision-making, risk management practices. I think we were built as a technology company, so we built our platform and we own it. And we have our proprietary scores, and we've been looking, for most of our history, to try and utilize some of that IP in partnership. And we had some success. A lot of different negotiations were taking place, but things got accelerated a little bit before the pandemic, but during the pandemic, we just got inundated with different requests for us to develop products or to to work with us on some aspect to optimize existing products for different partners, whether it's selling a score, creating a score, having some, you know, taking a heritage product and making it 100% digital. And then our reach, you know, was valued by the government in that, you know, they looked for the fintechs to bridge the gap to try and reach some of these independent workers and other people that were um, not working very much with the traditional institutions. So I think that's one thing that changed dramatically during the pandemic. That I think people understood our space in the ecosystem and that we were complementary. And I think when I started, it was much more of a tone of being disruptive, kind of adversarial, and you know, everyone had this hypothesis that we're going to replace some of the existing institutions. And I think now it's settled in that it is kind of a complementary space for a lot of the fintech players.
Thank you, Tarek. I'd like to take a step back and talk a little bit about the global perspective. Juan Camilo, if we could kick off with you, of investment in Latin America. Again, this post-pandemic world is changing things, but I know you're in, you know, Canada. We've talked about Australia a bit. How is the world looking in on LatAm, and how can either family offices or institutional investors take advantage of some of the opportunities that we're seeing?
Absolutely. There's a lot of appetite for new ideas, not only from Latin America, but from the world in general. Canada, in particular, is a small country. If you think about it, it's the second biggest country in the world, but has less people than Colombia, so just over 40 million people. So the government of Canada has created a lot of great programs for these great companies from Latin America and the world in general to come and use Canada as a lab. Everybody in the ecosystem of startups, everybody wants to make it to the Silicon Valley. But to make it from 0 to 100, being 100 the Silicon Valley, it takes a lot of time and effort. And usually these startups need to pivot several times in many cases in order to make it. So Canada sees Latin America and the world as a source of great opportunities to invest. We as a family office, we perceive that trend. And that's why we have also a branch doing venture capital in Latin America called Trinity Capital Ventures. The talent in Latin America is absolutely amazing. The work ethics in Latin America is I think, very hard to compare it with anywhere else in the world. So I think the potential for Latin America to continue to grow is great, as long as Latin America keeps up with the trends of the world. And I think in Latin America, and especially in Colombia, we lack a little bit of more revolutionary technologies. I think there is still a little bit of lag if you compare it with more advanced countries, for example, in the bioscience space. In order for Latin America to become even more attractive and attract capital, we need to keep up with the drone technologies. I think I read something about a drone delivery service to be starting in Colombia, but for 2025 or something like that. So we're still lacking that revolutionary technology
Juan,
access.
I love that you just brought that up, because I think it would be really interesting at some point to either study, or maybe Carlos is looking at this or not, but the STEM education that's happening in other countries compared to in Colombia and LatAm, right, or other regions, I should say, to see if that has something to do with that alignment. I just wanted to throw that out there. Lina, I think that's something we should look at for the future, because I wonder if that's where there's a lack of alignment there. So that's a really interesting topic. I hadn't thought of that. Thank you for pointing that out.
Absolutely, absolutely. And I think Colombia has the potential. There has to be a great alignment between the private and the public sector for this to happen. I know many cities, like the city of Medellin, has a great program with Ruta N and innovation hubs, etc. We need more of that because the talent and the minds exist in Colombia, and we don't want that talent to be exported to the US. We want to grow Colombian, Latin American startups that then can move either directly or using a trampoline like Canada could be an excellent trampoline to evolve their product and change the product in order to access the big ocean of opportunities that the US or the European Union can represent for a startup.
Thanks, that raises another interesting point. Tarek, I'd love to hear your point of view on this. Talent, right? So now you're a startup based out of Colombia, you're in Mexico. Was there a sense over the last 8 years that the talent you've been able to hire has also improved because of the startup ecosystem and the change that you've seen?
Yeah, I mean, I think Colombia is more attractive to a lot of either foreigners or expats to come in, and a lot of locals are getting experience abroad as well. I think on our side, we do look for people that have kind of worked or studied abroad for the senior management positions. We value that as kind of a filter to, for the people who are abreast of what's going on in our sector globally, so we can kind of maintain international standards. And I think that with the success cases that have happened recently, I think there is a lot more ambition, a lot more expectation of growth or disruption or success of what is possible. I think when I first arrived, there was a little bit much more of the perception of status quo, that it was permanent and couldn't be changed. So I think there's a new generation of Colombians right now who are a bit more commercial, a bit more aggressive, a bit more ambitious, which I think are very good for building startups. And actually, I mean, we get a lot more now inbound traffic of people trying to move back that were abroad that we didn't get before. So.
I love hearing it. Just don't let out the secret about why it's so wonderful here, and we'll keep going. Carlos, I would love to, we know that Tarek was in Colombia and Mexico, and I brought this up, but what other Latin American countries are starting to, I'm not going to say lead, because we're, Brazil, we know, and we're talking about Colombia being number 3. Who are the runner-ups? Who else is out there developing and moving? And what are the sectors that you're seeing develop in those other regions? Are there some that are more like Colombia and how they're developing? What does that look like?
Yes, that's a really interesting topic, Marcela. So we've seen that different countries across the region have developed a startup mindset based on the actual macroeconomic needs of their and resiliency of their own country. To put an example of this, the Argentine economy has been sort of fragile from time to time in the last 20 years, either because of inflation, either because of devaluation, either because of macroeconomic conditions in general. One of the most buoyant sectors right now in Argentina, for example, is crypto. Why? Because they see actually crypto as an alternative way for them to actually protect their assets, protect their value, which of course, like cryptocurrencies are another whole other topic in terms of whether they are actually a store of value or they have other usages and other means. But in terms, for example, that's in Argentina, for example. In Mexico and also in Colombia right now, something that we're seeing very, very prominently is a really high interest in early stage investing that covers both, of course, ROI and profitability in the long run, but at the same time has a social impact aspect that is pretty important. And there's an argument to be said here that actually all early stage investing in Latin America can be seen as impact investing in a way, just because of the actual impact that you can have either in the financial sector and education, in the real estate market, just because of the huge opportunity and the huge total addressable market that you can have. But just in general, for example, micro-lending institutions in Colombia, Aflore, for example, just had another round for $6 million, looking at the base of the pyramid and the underbanked population. So that type of opportunities, that's why, for example, fintech keeps on leading. I already talked about Argentina. Brazil is, of course, leading in terms of more developed markets. They already have way more unicorns, but they're leading, of course, in terms of prop tech. They have very unique business models, for example, with Quinto Andar, which is a very specific prop tech in the real estate market. But more specifically, we're already seeing the development of Central America and the Caribbean, which is something that previously wasn't considered as prominent just because of the actual size of the market. But a founder that is in one of these countries, in Bolivia, in Peru, actually needs to think in terms of a regional play. So I think right now there's like this dichotomy of whether you're a Brazilian or a Brazil-based founder trying to conquer the Brazilian market, or if you're trying to conquer the Hispanic market, aka the rest of Latin America. So that's that dichotomy. And of course, venture capital investors are looking for outsized returns because that's the risk profile that they're trying to build their portfolio on. So they want to make the 20, 25 investments in different companies just because they know that most of them, unfortunately, are not going to make it to a billion-dollar company like Rappi, for example. So they need that one or two companies to actually return all of the fund and then some, which is of course where they take the carry and everything. So you have to think about this globalized markets already in this aspect, and that's where we're seeing this trends going. And in terms of Colombia, I think going a bit back, we're seeing a different openness. For example, of course, and Zinobe is actually one of the leading cases, like Zinobe partnering with Mexarrent to actually go into Mexico. But we're seeing also Mexican players actually launching operations in Colombia. For example, Justo in the grocery delivery space. So in that way, that openness and that internationalization, before it was a good to have, now it's a must, especially for making the venture fund math work and for making the returns for the actual founder. So that's something that we're seeing across the board.
Carlos, Juan Camilo, I want to go back to what investors can expect, like what kind of trajectory, but I don't want to lose something you just said. Tarek, when you were looking to expand, what was the thinking there, right? Why Mexico first? Did you look at other places? What helps a startup founder or CEO at this point make that decision? Is it the partnership opportunities? Was it driven by your investors? How did you shift into that next stage?
You know, it's opportunistic, really. So it's looking for partners that complement us. So in the case of us with Mexarrent, I mean, I think this complementary dynamic exists, you know, between a fintech traditional player in any market, and we would have taken that. But I think the important factors are having that that fit culturally and strategically to make it work, because you can say, you know, the traditional player has the size, has the funding, maybe has the client base. We have the talent, the technology, the risk management tools. So they should work well together in most cases, but you know, things are much more complicated than that. So we had you know, relationships on the management side between us and them. On the investor side as well, we had some relations. So both sides were able to get comfort very, very quickly. And you know, if I could pick a market that we could go to, you know, in the Spanish-speaking LatAm, obviously Mexico is the best one to go to. So we're lucky that it was Mexican, but the factor that made it work were the other elements.
I'm going to put you on the spot and ask you if you had a next place to go.
Yeah, so in our pipeline of partnerships, you know, we have Central America, Peru, and Brazil, and those are again based on the partnership opportunities to work with people that really complement us, that we can bring something to the table and they can bring something to the table too. So we're fairly agnostic on which one to go to. I think we do, and in our strategy where it's more software based and kind of capabilities based, it doesn't take much investment. So even we can make smaller markets work for us as well.
Thank you. Thank you for that perspective. And Carlos, he just threw you a bone because you confirmed what you were talking about in Central America. So that's great to hear. So Juan Camilo, let's talk about expectations, right? We said, one of you guys said earlier, I think it was you, Juan Camilo, that said that, you know, Colombia doesn't have the history of this is the time it's going to take to exit. This is the number of companies. Again, VCs in the States, Silicon Valley, there's a formula they're looking for. So what is the trajectory? What are we seeing? Or is it just we're in LatAm, let's continue to build this out and see what happens?
I think it's a combination of both. I think investors in general are going to want not quicker exits necessarily, but for sure more access and more information about where their money is sitting. That is something that before there were a lot of angel investors that were quiet, very quiet for a long time. or funds that were very quiet funds for a long time, and then they got a surprise that either there was a closure or there was an exit. I think investors are going to become, and I mentioned this already earlier, less patient, but also more demanding. And I think there's also going to be a lot of people trying to bring their set of added value that they can bring to these companies to try to help them succeed. So investors in general, I see us taking a more active role, not necessarily writing bigger checks. Because in the end, if we write a big check, then we get either a seat on a board of advisors or board of directors, etc. But I see more and more investors acting as little funds where they can have at least one representative join the board or join the committee and have more access to information. Because for sure the pandemic has changed the way investors think. They want to know, okay, I didn't know you didn't have cash to make payroll, and even less that you didn't have cash to survive a pandemic. That is going to be a trend that I see happening, a new dynamic between investors and startups.
Carlos, are you seeing any specific trends yet, or are you kind of feeling the same way that it's still a mixed bag?
Yes, I think it's yet to be seen how things change after 2020, which is of course a year that brought unprecedented times. The interest is there. Latin America, specifically venture capital, investors in venture capital in Latin America, have always been driven to search more for profitability at the earlier stages compared to, for example, a more Silicon Valley model, which is more grow as fast as possible, take as much market share as possible, and then we'll figure out profitability. We've seen that play out in the past 3 decades in Silicon Valley. There's some instances in Latin America for that, but in general, investors are looking to see and to see validated business models, to see if there's like actually a customer need, if there's an actual demand, if you can actually reach that revenue faster. To Juan Camilo's point, I think after COVID, that trend is just going to be accelerated even further. Investors are going to want, yes, disclosure, but at the same time, they will want to see, okay, where's the traction? Where's the product market fit? And how are you planning to get there sooner? And it's a matter of the risk profile, right? Like we're already in Latin America, which is, of course, an emerging market for venture capital right now, way more mature than even 5 years ago. Even after up to 2019, just as another fact, the amount of capital inflows into venture capital had been doubling every single year since 2016. So the interest is there for sure, but just the way that investors are going to be approaching opportunities is going to change. But at the same time, you're going to see, for example, and this is to Juan Camilo's turf a bit, family offices are increasingly more interested in the asset class per se. Before the interest was through, for example, a fund of funds or just as a general GP investing through them in order for them to leverage their own operational opportunities. But right now, we're even seeing family offices going direct to startup founders. So they want to co-invest with these GPs. They want to, some of them are already LPs in some of these funds, but at the same time, they have the luxury of co-investing, so they're double dipping in some of these opportunities. We're seeing this more and more in the early stages of the process. So that's how the industry as a whole is changing. Yet to be seen after COVID-19, but we're pretty positive about investors' way to figure it out as entrepreneurs also change their business models.
Tarek, I want to ask you a quick question about this. I want to remind everyone to start dropping your questions into Q&A. We'd love to open up questions from our audience so that you can help me out, because these guys are so smart. I'm running out of things to say here. Tarek, what did you see? You know, we just talked about investor relations, and Juan Camilo and Carlos both had great points. What did you see? Did you see a shift, right? The company's been around for 8 years. Obviously, you're expanding, all good. Did you see a shift in how your investors were as the pandemic was developing, or was there already a good sense of a strategy and a plan? And I'm saying this because those watching are looking to you as a success story. was there already enough of a strategy and a long-term plan in place where you just said, we got this, let's move on? But what was that time like for you as a CEO?
Yeah, I mean, it's obviously stressful with the uncertainty. I think it pushed us in the same direction that we were prior to that. As I mentioned, going more towards, highlighting our strengths and trying to diminish our reliance on some of our weaknesses. So what kind of COVID stressed is maybe access to funding, origination, accessing clients. There was some disruption in those markets. I think what happened in the initial stage in kind of March, April time, we had more frequent reporting with our investors, and we benefited. I think we benefited from our technology capabilities and our control and transparency that we had in the business. So I think navigating through COVID, highlighted some of the things that we were saying that made us different. So the fact that we could change risk policies instantly, the fact that we could, change marketing policies, fairly quickly as well. I think we were able to adapt, and then we were able to launch this new product with the government in under a month. Again, I think it allowed us to kind of highlight some of our advantages. And, this type of shock to the system makes you think of, where you are vulnerable. So I think strategically it highlighted some of those things. And if you're able to navigate and kind of live another day, then you could focus on those areas.
Juan Camilo, as you were looking at investments, did you have a similar experience with the companies that you have relationships with? What Tarek explained, like which ones garnered in essence more or less attention based on like what were the key highlights, right? Who did you call first? What happened? What should, and I go back to this, right? What should founders expect from their investors? What did they expect when it happened, and what should they expect now that things have shifted?
The first thing we did when we analyzed our portfolio was to go to the stage of the business. Where do we think this business is? So if you're at the MVP stage, it's almost for certain that they're gonna die. Like it's very early, unless they have a ton of cash to finalize that development and go out to market. So we went to those first. And surprisingly enough, some of these very resilient companies, and this applies not only for Canada, it applies for Latin America and everywhere. If you are an entrepreneur and a founder, you're resilient by nature because you're gonna sweat and have tears, and you're gonna have your high blood pressure every day of your life for a long time. So that resiliency was what helped these early stage companies survive. So we went to the earliest ones first. And the first question is, it's survival mode, it's cash conservation mode, how much cash do you have? That's probably the first question. And some of them were lucky enough that they were either in the middle of fundraising or had just finished a raising round. And some of them had to go out in the middle of a pandemic and try to raise funds through virtual meetings like this. So cash in hand was very, very important early in the process to know what the runway was and how the runway was going to look like for them, how much stress, financial stress the company was going to have. Fortunately for us, there were no closures in the pandemic for our portfolio. We have been able to balance our portfolio and de-risk our portfolio by investing in more established assets with more traditional companies and startups. So we have a combination of both, and that has helped us balance things out a little bit. But for sure, entrepreneurs moving forward, they have to pay very close attention to the cash they have in their account. Usually when founders go out on raise and I meet with them and they say, no, I'm only raising 1 million or I'm only raising $500,000 for this little bridge round, I always tell them, raise more. There's nothing wrong with raising more money, oversubscribe. If you have more offers to invest in your company, take the money because you don't know what's going to happen. Your product development might take a little bit longer than you expect. So that is very, very important. Cash is king in the end. Everything else, the engineers are there, the developers are there. The cash is not always there. So take it when you can and use that cash conservation strategy as much as possible.
I want to go back to the ecosystem a bit. What are the expected, I don't even know if there's an answer to this, but I'm going to ask, what are the expected rounds, right? So let's talk fintech. What are the numbers we're seeing, Carlos? And do they vary by sector, right? Is fintech getting X amount in seed and then building out? Is it all over the place? Like, are there trends there that we can look to so that when other founders are thinking about their own plan, they have something to be guided by?
Well, I guess, and yeah, this is not going to be an easy answer, but I guess the answer is it depends, and it depends on several things. It depends on the country, it depends on the investor, it depends on the background of the founders, and it depends on the vertical, especially the vertical, because you have way more capital intensive industries than others. So for example, you cannot be comparing a grocery delivery platform like, again, in Mexico, Justo, which already launched in Colombia, with a fintech, which might be more software oriented and might not need to set all of these warehouses and have all of these fixed costs. So it definitely depends. What's true here is that we are seeing across the board rounds increasing in the region, and that's just a matter of valuations also increasing with as time goes by. We're seeing the firsts of many things just in the past couple of weeks. I'll give you a couple of examples. 1 week ago, we saw the largest round in EdTech in Latin America, according to LAVCA, which is an $84.5 million in Descomplica, which is a Brazilian EdTech. We saw a $50 million seed round in a Mexican e-commerce holding company called Valoreo, which just closed around with some very prominent investors, both local and international. So it depends on the sector. For example, that $50 million round is very much warranted because the business model of Valoreo, for example, is to actually acquire businesses, consolidate them, and actually create this mega holding company that is completely intertwined in the back end, right? So like you cannot do that without a bunch of capital, even at the very early stages. So it all depends on the leverage that you have, the industry, but we're seeing everything. We're seeing everything since like $50K to $150K dollar checks for people to get like idea validation, and those are more like quasi angel rounds. We're seeing a lot of angel networks, which of course that's another topic maybe for another session, because
I was about to bring that up to you guys next. Yeah. I was going to put Tarek on the spot about it, so actually I'll let you finish, and I am going to bring that up.
Yeah, no, like so the importance of the development of the ecosystem in terms of creation of angel networks, and how these angel networks actually facilitate not only the capital flows, but also the de-risking of opportunities for first-time founders that need that support to just test out an idea. You know, that's something that Brazil has been very successful at, Mexico as well, and now Colombia with the Ley de Emprendimiento. We really hope that Ley de Emprendimiento is actually going to help these angel syndicates actually be way more structured in the country and actually help the ecosystem. So I'll leave it at that.
So Tarek, as you circulate with other startup founders, tech founders, is the wealth creation starting to give back? The angel investors, are they coming in and saying, hey, I've made it, where can I put my money? Where can I put that first 25 or 50K in, and can we keep it? And I'm gonna, since 3 of us are in Colombia, I'm gonna kind of tone it back into Colombia for a second. Is it staying here, and is it creating opportunities within these networks now, or is there still a lack of trust at that angel investment level?
No, very much. I think there are a lot of kind of different maybe mafias out there, like Rappi Mafia and so forth. So my partner in Zinobe is somebody called Martin Schrimpf, who was in PayU LatAm, and he received an exit from the Naspers acquisition of his company, and I think when I met him, he didn't have the exits, and then afterwards I could see him and his network and some of his friends were there doing a lot of angel investing, which hadn't done before. And I know a lot of the other entrepreneurs in Mexico and in Brazil are doing very much the same. And you can see that in some of the press releases, you know, for some of the seed rounds, saying from the founder of this, the founder of that, are participating in a lot of these different rounds. So I think some of the people that have had success, they believe kind of this success is replicable from different people. And I think with the right support, if they have at least one angle of the game, which is creating that buzz, you know, connecting to investors and so forth, they want to pass it on.
Juan Camilo?
Is that being there, done that approach by former founders, and I mentioned that earlier today, the high value angels, the family office, and those repeat founders that want to fund and invest. And Rappi is a good example with Tool. They've created follow Fruana is another example in Colombia, where former founders start again. So that has helped the ecosystem sustain itself, sort of. With that investment, plus the high value angels, people writing bigger checks to Carlos's point, that has helped the ecosystem remain active, even though there have been challenges, and Tarek mentioned it. But I think the future is bright, I think, and we have to keep up the spirit.
I wish I could end on that note, but I have more questions. So there's a great question. We haven't talked about Asia. Question is, how much is the influx of Chinese and Korean companies into LatAm influencing the urgency of the Western countries' investment models and timing? Juan Camilo, have you seen any influence there?
More and more. There's a lot of capital in Asia. SoftBank's example is a really good example, and Carlos mentioned that earlier. With their entrance to Latin America was just like a big atomic bomb fell in the continent. Worldwide, there's a big interest in Latin America as a region, with Brazil as an example being one of the top 10 economies in the world historically, and with so much potential as a market itself. There's always going to be influx of capital coming from Asia.
But does that shift the model, or is the model in essence already framed by the region itself? Right? I mean, the dollars will come in, but are they pushing a different model? Are they pushing change? Carlos, have you seen that?
I wouldn't say they're pushing for change, but they're emulating trends that they have seen in their local markets. So there are, and for example, yeah, and this is just, LAVCA has a sister organization called the Emerging Markets Private Equity Association, which actually targets VC investment activity across all emerging markets. And we have the visibility and the opportunity to see what trends are not only permeating Latin America, but are also represented in Southeast Asia, for example. One of the biggest trends right now, believe it or not, is in food tech and the innovation in food processing products in the southern cone of Latin America compared to Vietnam and compared to India, for example. So investors need to be familiarized, at the very least, with the business model or with a category to try to search a different market and before they get into that market. Sophisticated investors rarely have the optionality just to invest a significant check in another region without trying to understand from first principles the model in their own ecosystem, in their own region first. That's one of the reasons, and this is starting to change, fortunately, but this is one of the reasons why local entrepreneurs, local founders, when they go to the US, for example, and they try to pitch US investors, they usually use the X for Y model. I'm the Uber for blah. I am the Postmates for blah. Because that's a way of getting into the international investor mindset, which is a way to make them comfortable, frankly speaking, right, of the opportunity in the market. So they just see a different market, but a similar business model. It's a way to speak about the business model. But at the same time, right now, with the resurgence of Rappi, with Kavak as the first Mexican unicorn, with all of these developments in the region, the need for an X for Y is ceasing to appear in the conversation. Now we have a local region with local problems. We don't need to extrapolate problems from other regions. We have enough talent, capital, and expertise to actually build something inland that solves our own situation without having to copy any other schemes. And investors are getting familiarized because there's a pull and there's a leverage into the region. So that's what I would say. And just specifically about the inflows of Asian capital into the region, and of course, SoftBank being the leading example here. it is as important for an ecosystem to have enough capital than to not overflow the ecosystem with capital, because both funds and startup founders need to have a way to absorb that additional capital, because additional capital can kill a startup the same way that no capital can. Because you try too many things at the same time, you try to expand too quickly without a proven model. There are so many different ways in which things can fail, not only from a lack of capital, but from an excess of capital. So like those are—
That's a great point, Carlos. Tarek, how have you kept the ship straight, right? Like, were there any inflection points, and should we go in this direction, or is it really straightforward from your perspective on what you set out to do?
Yeah, I think having more management control of the company made us a little bit more disciplined in some of our decision making. So what Carlos mentioned about the need to maybe go to another country just to justify evaluation, we didn't experience that at all. I think we ran it much more as a traditional company, trying to do something that made sense and make money, and something that was sustainable and buildable. But yeah, I think it really depends. The raising maybe at a too high valuation and too much money can definitely corrupt some of your decision making, and maybe do things that are not in the best interest of your business. We fortunately did not suffer that. We have investors who are very much aligned with our vision, and we didn't have the pressure to get an exit somehow by inflating evaluation and so forth. I think we're looking more long term. So we have some family offices in us, and they have kind of a much more long term view. We do have some institutional investors as well, but they too have more realistic, attainable goals for us, rather than go for the moon, and if you fail, you fail. Then I'll move on to the next company. So.
Tarek, I already knew you were a lucky man because you're married to a Colombian woman, but it sounds like you've got a great set of investors too.
Yes.
So some closing thoughts. There's a question about, have we seen significant growth in cannabis or mental health? So what I'd love to do is go around the room. Juan Camilo, I know you mentioned this when we first met. I'd love to go around the room. I'm going to say outside of fintech, because Tarek and similar companies that are so focused on that space have proven that that's a strong sector. Where else would you put one bet on a sector here? We know that mental health became such a big issue with the pandemic. We saw a lot of great ideas come out of that. So I'm going to put you guys on the spot. Closing thoughts on one, where you'd put your next dollar.
I'm going to say everything wellness or edtech. And yes, just to answer the question about cannabis, especially with Canada, there's a huge communication and investment channel between Colombia and Canada, and lots of appetite for Colombian growers to grow cannabis from Canadian companies.
Tarek?
Yeah, I was going to actually say education as well. So edtech, I think I like that business, and that's probably something that I maybe will go into in the future. And I like the economics of it, and definitely there is room for improvement, and bringing of best practices from abroad here, and applying technology to some of those solutions to make a difference.
I'd say yes, edtech, but just to shift it a bit, I think it's important for us to also consider what are going to be the implications of this new world of just remote work everywhere, and the need for employees to actually find purpose and other communities outside of work. So I think one of the most important things is, yes, to Juan Camilo's point, mental health is going to be extremely important. That can be just an extension of several platforms that are doing HR tech right now, for example, that they need to take care of their employees, or just therapeutic platforms that want to do, like, for example, consulting services. Like, there's a company in Brazil called Teia. They only do consulting services for people in psychology, for example. So you have this broad range of services that either D2C or B2B, they're definitely going to be present in the ecosystem, and more than ever are going to be needed by both employees and just consumers as a whole. So health tech, I guess.
Thank you so much, gentlemen. We are just about a minute short, so I want to thank you all for your thoughts on this. It's such a broad topic, hard to cover in an hour. I have no doubt that Lina will be calling us back to dive into some of these topics a bit more. Tarek, we've got to congratulate you on your success. We're really excited to have companies like yours building and growing in Colombia, and I want to thank everybody for attending today.
Thank you,
Thank you very much for the invitation.
Thank you for the invitation.
Have a great Wednesday, everybody.
Goodbye.